Hi, I'm Victoria Velazquez with the agency.
And I'm Sarah Knauer.
And today we're going to talk about shifting economic and market conditions because we know that's what everyone wants to know about.
So first, we just want to make a distinction between what's happening today and what happened in 2008. We know that is really top of mind for people. Most of us experienced it. One of the biggest distinctions between now and 2008 is the number of super prime and subprime mortgages. So today, 70% of borrowers are a super prime borrower where they have a credit score over 760. And in 2006, 2007, leading up to the 2008 financial crisis, only 25% of borrowers were in that super prime category. And on the flip side of that, today we are seeing only 2% in a subprime category. And then in 2006 and 2007, 13% of borrowers were in the subprime category. So again, what happened in 2008 was based upon housing and the qualifications of the mortgage borrowers. However, today, we're not seeing that as the reason for any of this economic shift. There are, of course, other economic factors like COVID, a war, really high inflation, but it's not centered around anything to do with housing. Again, we will see an impact, but it's not going to be like it was in 2008.
In addition, I think one really important distinction that's going to impact what happens in the next couple of years is that we've seen really amazing appreciation these last few years that has far outpaced the rise in mortgage debt, which was the opposite prior to 2008. Again, we keep referencing 2008 because when we hear the word recession being thrown around, that's the first thing all of us remember, but this is quite a different situation. As a result of the appreciation that we've seen these last few years, the loan to value for the housing industry as a whole has hit a 25-year low, meaning homeowners' equity is an all-time high. As we face these changing economic conditions, we're in the very fortunate position generally that people are not going to be underwater on their mortgages and they're not going to be in a position where they're forced to sell their home. Because of that, we do expect the number of transactions to slow down, and as such, the rate of appreciation is going to come down as well.
Along with all of this, though, we will hopefully begin to get back to a more balanced market, which will mean the amount of supply and demand will begin to even out. And for those of you that have been really trying hard to get in the market and to purchase a home, this will hopefully give you a better opportunity to do so.
We want to emphasize that each situation is very individual, and we'd love to discuss your particular timing, lifestyle moves, and how this applies to you anytime. So please reach out. Our information is below.